Hey everyone, my name's PK. Here in front of me, I have Sneh Shah, who's a client or a student of the Property Investment Accelerator, and I'm very grateful and pleased to have him on today and go through his property journey because he's very experienced. He's done 8 property transactions, 3 of which have just been in the last 3 to 4 months, and that's been through the course. But we're going to dive deep into his broader strategy, perhaps his lending strategy, why he's purchased the property he has, the properties he had, why he sold some properties before as well. He's a IT professional based in Melbourne, and I think this will be really insightful. I'll just introduce the session by going through some of the key highlights from these 3 properties just to whet everyone's appetite. So the first property he bought through the course was in regional Queensland. He bought this for 349. This wasn't that far back, right? This was like in the last 6 months.
Yeah.
And its valuation was already by another bank post settlement at 495, which was great. And the rent's 470. So that's almost a 7% yield. So that's fantastic with the upside for another bedroom. We might go into that during the discussion as well. Second property bought over in WA, 330, renting for 550. So that's an 8.7% yield. Like, how is that even possible? I'll ask him as we go through the session. And so that made 2 properties in 3 months for him through the course. And then the third property was bought once again in Queensland in a different location for 395,700, and he negotiated more than $20,000 on that one, renting for 500 a week from June this year once the rents go to market rents. And yeah, it's not like a super old property or anything, but it was just poorly marketed, but the tenants have been there for 14 years. So anyway, those are some highlights just to whet everyone's appetite.
Welcome to the Oz Property Investment Mastery Podcast. My name's PK and I help busy people build passive income by buying top 5% growth and cash flow property and build a portfolio using data without wasting months doing research, spending weekends at inspection or catching flights, or dropping $10,000 to $20,000 on buyer's agents every single time. So if you're confused, lack confidence, and just overwhelmed with all the information and marketing misinformation available online and don't know where to start, then this show is for you.
I think my first question, and by the way, congratulations, Sneh, and all that. But my first sort of question is just like, you put in a lot of work. Like, how do you feel about your property portfolio as it stands at the moment?
Yeah. So I think if I have to answer in one word, I feel confident because now having done so many property transactions, I would say in last few years, and I think I'm becoming more confident, and that's why now you see I'm increasing my pace, which is the result why I have three properties bought in the last 3 to 4 months. So yeah, I think I feel good, more confident, and looking forward to where the journey forms and shapes.
Nice, nice. Well, I think that's the most important thing. I mean, confidence, I feel, even if you have all the numbers, all the data, all the skills, unless you have that confidence, which actually comes, I'll ask you in a second this as well, actually just comes from doing.
Yeah.
Confidence comes from action.
Yeah.
Unless you have that, then you actually don't get any results. But let's kind of
Yeah.
rewind all the way back. I think you said before we hit record that you've been in Australia. What was it, 5 years or around
Yeah,
5 years?
almost 6 years now. I think I
Almost
came.
6
I mean,
years?
yeah, almost 6 years now.
Right, right. And so, like, how did you make your first baby steps into property? Or in other words, what's been your property experience before doing the course?
Yeah, because so since I was born and raised in India, and I moved to Australia, it was completely unexpected for me. It was like 2 months before I came here in April 2018. So yeah, 6 years now. April 2018. In Jan 2018, I didn't know I was gonna come to Australia. So it was very unexpected for me. But before that, my life in India, I had this goal that I had it written down uh, in my uni days that I'm gonna have my own house by 2020, paid off. So I always had this attachment with property. I always had the dream of buying my own, and not having any debt on my house.
Mhm.
Uh, and back in India, when I had my cousins in US, I had heard of the situations where their repayments were less than the rent that they were getting, which was not possible and which was unheard of in India. So
Right.
I think when I got a chance to come to Australia, uh, it was always at the back of my mind. I want to explore how what the real estate market is in Australia, and if it's a good option for me to start investing over here. So yeah, when we came here, I think for first 1 year I was renting, and then when it was decided when I got my PR, it was finalized that okay, we are gonna stay here forever now. I immediately wanted to buy a property to for us to live in. So that was my first property that I bought, and I think this was in 2020,
Okay.
uh, and this was in Point Cook in Melbourne. So yeah, I while I was looking to buy this, I was exploring how do I determine this is a good property for me, and internet research and all that. I came across buyers agents. I came across a lot of data that we have on internet. Now we have a lot of noise, but even at that time, I think there was a lot of information available. So but yeah, I was lucky to kind of find my first property over there. But during that search, I did come across or across few buyers agent that I interacted with, and then I kind of determined, it may be a good idea to leverage a buyer's agent if I'm buying a property for investment, but not for my owner occupied. But that was my first interaction with uh, investing in property, talking to a buyer's agent, and then being just exposed to, uh, you know, uh, property as an investment.
Right, right. So you bought your first principal place of residence in Australia in Point Cook, and
Yep.
then is it that you used a buyer's agent to buy some
No,
properties, or what was the next steps?
no. So this was I bought it on my own without a buyer's agent. But while I was searching for this, I did come across a couple of buyer's agents where I thought of leveraging them, but I didn't end up taking their help in buying the property. So yeah, this was my first property. I bought it for around 650K at
Mhm.
the point of time. And one mistake which I did was I did not think forward. We have a daughter who would be school eligible in next 2 years, but we didn't think about school zone and all that stuff at that point of time. So,
Oh,
excuse me, I bought a property without thinking about, if I'm okay to send my daughter to the school zone in that area or not.
right.
So 1 year fast forward, when we started thinking about, okay, we need to put our daughter to school, and we determined that there was uh, here we have Alameda school zone, which is considered to be a good school zone. So I like, okay, we need to put our daughter in this school, so we better buy a property in this school zone. So that's how I started looking for my next property. This would be my investment property for at least a year. The plan was that we would move into that property after my daughter is old enough to uh, to the school. So yeah, that's how kind of I bought my second property in the school zone. The plan was for me to move in, but because we bought it before 1 year, I uh, leased it out to a tenant. So this was my second property, again in Point Cook. I think typical, right? I mean, you buy your first IP in your backyard typically, so that's kind of the story here.
Hmm.
Uh, this was right during the COVID time. So I remember I had not even seen the property on my own. I had not inspected the property. Of course, I'd done the building and pest, but I made a decision to buy the property, looking at the photos. I knew the location, very very familiar with the location, but the property itself I had not inspected. And yeah, I bought that property for around 750, and that was rented for 450 per week. Uh,
Okay.
yeah, at the point of time.
Right, right. So that was your second property, which was a rental for a period of time. Then you moved in, and then what happened? Like, I think you've transacted 8 properties. So yeah, it seems like
Yeah.
you've done a lot in the few years. What's happening next?
So the second property that I just spoke about, that was a mistake, actually. And I think you probably could have figured it out when I was talking about that.
Want to say anything?
Because at that point of time when I bought it, the interest rate was like 2.2% for interest only.
Mhm.
And then I think the yield was around 3.2%. I was okay with that because I was able to afford it and was not, I was short of around 200, 300 per month, which was okay for me.
Mhm.
And no one was talking about interest rate hikes at that point of time. All the banks were like, we don't foresee any interest rate increase for next 2 to 3 years.
Yeah.
So I was like, okay, the prices will go up eventually, so I don't mind. Anyway, so yeah, I bought this. It was negative geared even at that point of time, but it was okay. Now, when my daughter wanted to go to school, or she was old enough to go to school, we kind of then decided, okay, are we going to move into this property or not? Then we determined, okay, it's a little bit small for us, so we would not move into that property. So we bought my second PPOR, so essentially another property where we would move into, again in the school zone. And then we'll keep this one as investment and sell off the first property that I bought.
Right.
So that was the third property that I bought. While that was happening, I then leveraged or engaged a buyer's agent who is very famous, I would say, RIA Hall of Fame and all that. And then they helped me buy an investment property in Townsville. And this was in 2022. So I engaged them in end of 2021. And then we settled on the property that they recommended in Jan 2022.
Right.
Now, when I was comparing the two investment properties I had at that point of time, so one in Point Cook and the one that was in Townsville, the Townsville one was positively geared at that point of time. And that was kind of neutralizing the negative gearing of the Point Cook one. So I was
Yeah.
still okay with it
Yeah.
at that point of time. And then I was continuously reading and learning from the groups on Facebook and YouTube videos, people like you, who are gracious enough to kind of, deliver good content for us to learn. Uh, so yeah, I kind of realized and made up my mind that it is better to invest in regional rather than in capital cities. You have to consider yields, you have to consider cash flow. It is not that you get capital growth only on low yield properties. It's not that you get capital growth only in capital cities. At that point of time when I joined, there was this debate. Are you investing for cash flow or are you investing for capital growth? I was like, it's not either or. You can get both,
Mm.
right? But there was this conception that, and a lot of people bought into it. But yeah, so that was at that point after buying this first IP through the buyer's agent, I was more convinced that next investment properties that I buy, I have to consider cash flow, and I would probably be betting on regional as opposed to buying in capital cities at that point of time. So we bought the fourth property now, which became my second PPOR after two IPs. And then I hit a situation where I was completely out of my borrowing capacity.
Right.
And I realized the extreme situation of that when I applied for a credit card and I was rejected. It was rejected by the bank. So that came as a shock because never in my life had been a situation where a bank would reject my credit card application. It would be the other way around where, everyone would go,
Normally they're
go ahead and
forcing you to
yeah,
take one because they want to
right.
make money off you.
So, and the interest rates had started going up. So that's when I realized the criticality of the situation I'm in, that, okay, I'm able to digest the negative gearing of the property that I have in Point Cook, but that does not look good on my financial status right now. Banks are, not giving me critical, which means it's a critical situation. So I had to so and as I said, when I bought it, the interest rate was 2.2. 10, 12 months down the line, the interest rate was more than 6%. So my initial repayments, which were around 2,200 per month, now they are 4,600 per month. and my rent continued to be around, 2,000 per month.
Right.
So what I was $200 negative per month, I started becoming $2,600 per month negative, right? Which kind of went on.
Which adds up.
Yeah. So I had to make up my mind whether should I continue absorbing and keeping this property or should I sell it off. Uh, Luckily, we decided to sell it off, and and again, lucky enough that the property did grow in value. I bought it for 750, and I was able to sell it for 815. So, considering all the loss I had through the interest, it did grow to make it net neutral essentially.
Right.
So didn't make profit or loss on that one. But I was lucky I decided to sell that off because if I had kept it for another 6 months, I would have actually made a loss, pretty terrible loss on that. So that was all my learning phase of making mistakes, and then actually I did make one more mistake on that because I refinanced that property and I over-indexed on borrowing, and so I bought that property for 750, as I told you,
Yep.
and then CBA valued that property for 900.
Okay.
So I was very happy. I was like, yay. So, and then I went ahead and borrowed 90% on that property, paying LMI to CBA with the valuation of 900.
Mhm.
So, and then I was not able to refinance it back because none of the other banks were valuing the property at that valuation.
Right.
And so I had a loan or I had a debt of around 820 on that property, and the valuation of the property itself was around 815 or 800.
Right.
So it was a very, very bad situation. So the important lesson I learned from that is I now don't really go by bank valuation,
Mhm.
and I don't over-index on borrowing on my existing properties without being sure that I can actually sell the property at that value in the market in current market.
Right. Right. So would it be
So
fair to say, Sneh, that when you started your journey, I mean, you mentioned that you didn't really consider school zones when you bought that first property, and that's why you bought that second property that was intended to be lived in, but then you never ended up living there because it was a bit small and not ideal. And then this property is also was highly negatively geared. So I'm just trying to gauge because I think this might be useful for everyone. You made a lot of transactions, but I mean, you're a very intelligent guy, right? You're an IT professional. You're clearly, very, very intelligent. I'm not saying these were not intelligent decisions, but I'm just trying to enter into your mindset. Was it like rushed, or was it like the community around you feeding misinformation accidentally, like well-meaning misinformation, or was it other influences? I'm just trying to understand like how you made these, if you would call them mistakes.
yeah. So I think the decision of buying in the school zone was a bit of both, right? Because when you're part of when you're living in an area, you interact with friends and neighbors, right? You hear things that, this is a really good school zone.
Hmm.
And then because at that stage in my life, school zone was really important to me personally.
Hmm.
So that was, an impacting factor in making an investment decision, which should not be the case,
Right.
right? So, yeah, and then there was an assumption which was not backed by data that this area properties in this area will always be in demand because of the school zone, so it will always keep on increasing. Again, not backed by any data, just by uh, general understanding, I would say, just by general assumption, right? So that led me to believe that it's a safe bet to kind of buy a property in a good school zone, uh, even if it is negatively indexed. And then again, relying on the government reports that interest rates are not going to go high, it will be okay. So I did calculate that, okay, am I going to be able to sustain this property long term? But it was based on it was not backed by data. It was essentially based on misinformation which was circulating at that point of time.
Right. Well, I think you can be forgiven for that because myself
Yeah,
included, I don't think anyone expected
yeah,
rates to go up this fast. But no, that's a good insight. And so you bought that first interstate investment property through the buyer's agent, and then okay, now you have, something that's more positively geared, at least at the time. You're selling some of your previous assets. What's your mindset now? Like, what's your strategy at this point in time? Are we thinking
Yeah.
2022 at this point, right?
Yes.
Yeah.
So now I've seen that investing in regional properties is better for me. I've kind of understood that. But my experience of buying through a buyer's agent, I wouldn't say it was that positive, right? So financially, it has been okay, but there was always this fear that I don't know what is being proposed to me is correct or not for me,
Mhm.
right? So this specific buyer's agent kind of works in a way that they don't take any input from your side. They say, we will give you a property. You say yes or no to us. If you say no, you have to explain why. Uh, and if not, you essentially just take this, right? So we are like doctors. We prescribe you a medicine, and then you take this medicine. Essentially, that was their approach. I was
Right.
like, okay, that's fine because I don't have that information. I don't have the knowledge to buy the investment properties. But how do I validate that? Because there's no guarantee or warranty that the buyer's agent would give you, right? What if this property does not grow? What if it turns out to be a dud investment? Are you going to repay me back the fees that I paid you? There's no, what do you call it? Uh, ownership on their side in terms of, how would they pay me back? If it goes down, it's my loss. If it goes good, they anyways making the money out of it. So I wanted to learn this. I wanted to understand how do even if I use a buyer's agent, if I, for my next properties, if I'm not able to invest time to identify and buy, I still need to understand how do I validate whatever they are proposing to me. Is this a good buy for me or not?
Right.
Considering my financial situation, all that. So yeah. So the property they recommended was in Townsville in 2022. So as you know, it has been good in Townsville so far. But yeah, I didn't know at that point of time, but this is and I didn't like that situation where I was uncertain and I was kind of just completely dependent on someone else's decision uh, of of my investment.
Right.
So
Right.
that's where I kind of came across your course and decided to uh, educate myself to be able to buy investment properties on my own.
Right, right. So it was a case of like, okay, I trust this buyer's agent enough because they've won awards, etc., to be able to part with, their fee, but I don't like necessarily trust them enough to do the right thing. So it's either like they won't do the right thing or they're incompetent, right? Because that's where the necessity of validation or verification comes from. You've trusted them enough to pay them their fee, whatever the fee was, but it's like, okay, but are they competent? Okay, I'm not sure. Or if they are competent, are they doing the right thing by me? Like, is there a character? Do they actually care about me? So, the need to verify this whole concept that you're talking about, was it a mixture of, oh, I'm not actually sure if they're any good at what they do? Or is it more like, okay, I'm pretty sure they're good at what they do, but are the deals that they're sending me, do they really care about me? Do they understand me? Like, do you understand my question? Was it
Yeah,
one of these two, or was it something else entirely?
no. So it was not me doubting their professionalism or their intent towards me, anything like that. Uh, See, in terms of uh, deciding to go ahead with a buyer's agent, I didn't see any other option. Right? I At that point of time, I was not sure what is the other option for because I knew that if I had to buy interstate, I don't know. I don't know how to validate and verify, what data points to look at, how to go about it. I was completely blank, right? So at that point of time, the only option for me was to go with a buyer's agent. Now, the reason I decided on a specific buyer's agent was because I could align with the approach that they suggested in their promotional videos. This is how we do. This is how we uh, identify suburbs and all that stuff. So they were the only ones who kind of I was in agreement with their approach,
Right.
what they told that. So But I didn't know if the approach that they were suggesting, was that just promotional, or they actually implement those while searching a property for me, right? So they tell you that, okay, we do this, XYZ, but I didn't know if they were actually doing that. Was it just promotional for getting clients, right?
Mhm.
So, and there was no way for me to validate, and I didn't kind of doubt their intention or whether they were lazy or something like that. But I always have this need to be 100% aware of all the decisions that I'm making, that are being made for me, right? Why are we buying here? What is the logic? What is the data points? Why do you think this is good for me, right? And if someone else is, see, if I'm paying a professional, then that professional needs to be held accountable for it, right? Which is not the case for buyer's agents right now. There's no regulation around it. So if I'm paying $15,000 to someone, and if that investment goes dud, the buyer's agent cannot be held accountable for that in any way, form, right? So
Mm.
that's why I think it was more important for me to self-educate and learn. And because I knew that I wanted to build a portfolio of property, it didn't make sense for me to kind of go through the same feelings every time I buy a property, and again pay 15,000 every time I buy a property, and having to trust someone else to make that decision for me.
Right. Okay, I understand. It's a good gateway into to your mindset, because I asked that because I think a lot of people might be going through that. Like at the start, you said, I asked you how you feel about your portfolio, and you said confident. And I
Yeah,
think I'm putting words in your mouth here right now, but I think because you've actually learned everything yourself,
yeah,
and now you can verify or validate what's a good deal, if your portfolio is good or not, is that's
yeah,
what is
yeah,
building you or giving you that confidence now?
absolutely. So and the initial stories, the initial transactions that I said, right, they were mistakes that I made, and then I've learned from those transactions. I've learned from those experiences. I know what not to do. My experience of selling two properties also kind of gives me a very good exposure to what goes into the sales agent's mind when you're selling a property, right? What's the relationship between the vendor and the sales agent, right? When is a sales agent under a pressure, and they can actually put pressure on the vendor to sell if the
Mhm.
property has not been selling for quite some time, for example, right? So these have been the learnings, which, and then I try to apply those in my last two, three uh, property purchases, and they have resulted in a good way so far. So that gives more confidence to me, kind of to continue applying what I've learned and being more confident in buying more
Right.
properties.
And I'm not trying to plug my course, but I'm just trying to ask this question from a confidence perspective. Was all the data factors, all the processes and procedures, and the contacts that I provide in the course, etc., did that satiate your appetite for, like, really sinking your teeth into investing and understanding everything from all angles to be able to then, I mean, it's kind of a self-fulfilling question, because I know you bought 3 properties, but I'm just trying to
Yeah,
understand, like, because you're IT professional, I don't know if I'm allowed to say this, I'll edit out later if I can't. You work for Amazon, so it's like, it's a very analytical mind that you would have, I would say.
yeah.
So do you think that, like, is there still elements that you're not confident about, or was the data that is taught, like, did it just plug that gap for you?
So I think how your course really helped me was the structural approach, and how to kind of go about identifying the suburbs. I think step by step process of it, eliminating suburbs and stuff like that, right? So that was I think the main learning for me. The second really good learning for me was also how to interact with different professionals. How to engage, what questions to ask to the sales, and to understand a better picture, right?
Mhm.
And that combined with my learnings of working with my sales agent, it kind of added to that, right? So, uh, yeah, I think from my experience and what was taught in the course kind of gave me a complete, I would say, if not 100%, at least 99% of what I need to know to make uh, next property purchase. It gives me a very good understanding of what to do, what not to do, how to approach, how to identify, and things like that. And I don't know if you noticed the trend in the last three properties that I have. It started actually with the second PPOR that I bought, right? So I always try to, I think I'm observing this pattern that I kind of find uh, poorly marketed properties, and
Mm.
then I pitch really low, and then I kind of somehow become successful in getting that. So the second PPOR that I bought, which was my fourth property, that was actually marketed as 1.1 million,
Okay.
and I bought that for 930.
Right.
So, and that was on the market for like 2.5 months. So I knew that the sales agent was under pressure for selling that, and he was not able to sell that in a hot market. And I was like, let me put 930. If they take it, great. If not, uh, I'm not losing anything, kind of thing. And
Right.
they took it. So, so that gave me some experience and confidence. I did the same thing for the first IP that I purchased through after your course, which is I bought for 350, and then now it is valued at 500. So it was a property which was not marketed well. And I think the one of the key factors, when you to find and identify a property that not when your pictures are not very good, right? When the picture photos are not professional, they're blurred,
Mm.
phone images kind of thing. You know that the sales agent has not really done a lot of put a lot of effort into marketing this well. The second point that I generally say is if you have made an RE inquiry, through realestate.com, if they don't get back to you, if you try to send them a message or a call, they don't return it. That means, they either not doing their job properly. Of course, it's a different situation in a hot market, but in a cooler market, if that happens, and if the property has been listed for, more than a month,
Yeah.
then there's a good chance that the property may be good, but the sales agent is not doing the job properly, kind of thing.
Right. Right. Let me ask you a question. This property that you're referring to, it was bought in Townsville.
Yeah.
You already had one through that buyer's agent in Townsville. Um, what gave you confidence to buy two in Townsville? Because up until this time, it's
Yeah.
not like you had a diversified portfolio already.
Yeah.
You only had those Melbourne assets.
Yeah.
So, why double down and not instead of diversifying?
So that was the biggest question I had at that point of time. One of the thought process was, I've paid 15,000 to a good buyer's agent to help me identify an area to buy a property. Now I know the area, right, which is expected to be good. So why don't I just buy a second property? This was even before doing your course, right? So this was like, why shouldn't I buy? There was a property just next door, right? So the property that I have,
Right.
just next door to that, there was property that went up for sale. Like, why don't I buy
So
this one?
no diversification at all.
So, so that was I did debate that quite a bit, but then essentially, yeah, I wanted to see, it's good to diversify as well because what if this market doesn't boom, right? So,
Mm.
so then I ended up with two dirt properties which are not growing as opposed to one. Uh, but then after going through your course, all the data pointed again back to Townsville. So that gave me more confidence that okay, now I know. So one buyer's agent has approved it because based on their claim, this is a good area to buy in. I've done my own due diligence. I know the data points towards Townsville. It is gonna go. So that gave me more confidence in buying my next. So I didn't buy in the same suburb. Of course, it's still Townsville, but bought in a different suburb. Uh, and I felt two properties is not too much in one city.
Mhm.
So yeah, for the third property, I would think more harder,
Right.
kind of thing. But I was okay with my second property over there.
And you bought it for 349. This was late last year, and it's valued by another bank, just after settlement at 495. So that's a
Yeah,
huge increase. But you mentioned before that now you take these bank valuations with a grain of salt because you've
yeah,
been burnt before. This
yeah,
495, is this a legit valuation? In the course I teach you how to. I think this is a really important point.
yeah,
Don't trust the bank valuation. Don't trust these automated online valuations from different websites. You have
yeah.
to do that work yourself. Is this legit, or did you, when you valued it yourself, do you think it's actually less?
So I think it was not legit at the time. So I bought this property in November 2023.
Hmm.
I don't think it would have sold for 500 at that point, 495 at that point of time, or the immediate next day.
Yeah.
But I would have it still valued at around 450. And the reason I know that is because the property next door uh, was an inferior property and that sold for 425.
Okay.
So, and actually, that sale of property led me to buying this property. So when I was talking, the two properties side to next to each other, they were on sale,
Mhm.
and I was more inclined to buy the property that was listed for 425. Uh, and I was talking to the and because this one was not marketed well, I didn't like the look of it from the photos, right? So I was talking to the other sales agent, and he kind of hinted towards it. The property next door is not marketed well. They're not doing any open houses. It is a similar property, but I am able to sell my property for this much kind of. So that led me thinking, okay, if it's just not marketed well, then I think it's better for me to buy that one as opposed to what this guy's selling. So, and then I, dived into that. Even if the sales agent was not responding to me a couple of times, I stuck on it. I went on, sending him queries and texts and emails and tried calling him a couple of times. Eventually, he responded back, and then I was able to buy the property.
Right. Well, there's the lesson for everyone. Try to look for properties that look terrible from the pictures, from the ad, from the
Yeah.
listing. And if the was it like an out of town agent or like what was up with that? Like were they just
Yeah, I never heard
lazy
of them
or
before. Yeah,
yeah, right.
they were. I mean, I've not seen any of the listings from this agent before, and I'm quite active in that market, looking at properties, even just to keep up to the market. So I've not seen a lot of listings from them. So yeah,
Yeah, no, that's a and one sort of tip I can also share for everyone, just trying to add as much value as I can is, if you go to rate my agent, you can find the top agents, but sometimes try to find like the in a Pareto, like the alienated, like incognito
yeah,
agents that don't have much activity in a suburb, because they're the ones who may actually, I don't want to say this out loud, but I will anyway, they may not care about their client or vendor as much as other agents who value that suburb, that
yeah,
really are active in that suburb and just maybe a little bit more ethical. So I mean, as property investors, we want to be ethical, but if there's a property that is selling for under market, then
yeah.
why not? So I think that's a really good. And there's also potential to add a fifth bedroom in this one. Sneh,
Yeah.
how would that look like? Like, where would the fifth bedroom go? I mean, I teach this in the course, but how much uplift could you get from that?
So the suburb that this is in, right? The five bedrooms are not that common, right? It's a the general 3 to 4 bedrooms is essentially more common. The good thing is it's a typical, in Queensland you have ground level and first level. But typically what you have is you have 3 bedrooms on top, and then one bedroom is kind of at the lower ground level. This one has 4 bedrooms on the top level, and then at the ground level they have full living zone, right, and with a kitchenette and all that stuff. So it can kind of be completely self-sufficient, kind of a granny flat thing, but they've not made it that way. So that's the potential of it. If we just add a wall over there, just one wall, we can make that a complete detached, not detached, but complete bedroom, big bedroom, with a living room and with a kitchen and a bathroom. Uh, so yeah, that's the potential that can be done over there.
And have you explored whether that's a legal height downstairs so it can actually be advertised as a fifth bedroom? Or
I've not done check the height yet. So I checked with the property manager if we can kind of, if we go through having separate meters and stuff like that, can we have two, dual occupancy kind of thing?
right.
But they recommended not to go through that right now.
Mhm.
Uh, so I may, dive deeper into the legalities of things and what is the cost required to inject if we have to go that path
Mhm.
uh, later in the state. But right now, I'm not dived into that.
Right, right. I mean, it's a good problem to have and good opportunity to have,
Yeah,
for sure. I mean, it's already a really high yield, but if you can, rent that out separately, or even if you can't, then you're attracting a family with more occupants, and they'll
yeah,
likely give higher rent. So that's some value add potential. I just want to skip to your second property in WA. I mentioned it at the start of the episode. It's got an 8.7% yield, and it was purchased for 330. It's just south of the Perth region. 8.7% yield sounds like there's got to be something wrong with this, surely, right? Like, what's the catch? Like, okay, that's positive cash flow even with current interest rates.
yeah.
I got to ask, like, how did you do that?
It was not intentional, and I think I got lucky with this one as well. Uh, The property was marketed for 320. And then I was the first person to call the sales agent. It is still a hot market over there. So yeah, the moment the listing came up, I called the sales agent and uh, asked him for the details, and then I put in an offer immediately. So the sales agent came back with. So I asked him, "Do we have a rental assessment for this one?" He didn't have one, so I leveraged. I had already engaged the property manager over there to help me with inspecting the property on my behalf and kind of doing the due diligence. So I asked a rental assessment from the property manager, and that came back around 400 per week.
Okay.
So it was not this high yield. So when I decided to buy it, I was not aware that it's going to be this high yield. But we finalized the transaction. So they came back with a counter offer of 330. I accepted it, and then we went ahead with the transaction. Before settlement, I think when we were doing the building in pests and all that stuff. So that's when I formally signed the property management contract with the agency, right? And then I asked them for another proper assessment with a document. So initially they just done a high-level assessment and just send me a number kind of thing.
Mhm.
So this time they allocated me with a property manager, and then she told me, "Sneh, we can actually get 500. Do you want to try with that?" So it's like, yeah, why not? And I actually checked when I searched in real estate for rentals in the market, there was just hardly one or two rental properties available. Uh, so similar condition, not just similar condition, any condition. There were only one or two properties available for rent,
Mhm.
and they were higher than 500, 550, 570 per week. So I was like, even if this is inferior property to these that are listed, there's no harm in trying to market it at 500 and see how it goes.
Mhm.
So we put it at that, and then yeah, they took it.
Right, right. Uh, It's like it's not as if there was a lot of comparables,
Yeah,
volumes of comparables. It was nothing for
yeah,
rent, and so
yeah,
therefore your property manager recommended have a shot. I want to understand this from a tenant perspective. Like obviously we don't just take any tenant, if they're
yeah.
giving an application for 550. Um, do they have the affordability? Like, when you
Yes.
submit a application as a rental,
Yeah.
there you have to show your income and all this sort of thing. Can they
Yeah.
actually afford it?
Yeah, yeah, absolutely. So we had 5 applications. So when we did the open house for rent, there were 14 people who kind of visited the property to take a look at it in person. We had 5 applications, uh, and then we validated each. We went through each one of those, and then we identified the best one out of that. So this tenant did not have any pets, no kids, 2 ladies living there. Uh, yeah, and they had it was less than 30% of their overall income and all that. Yeah, so it checked
Amazing.
all the boxes. Yeah,
This is a really important point because I think sometimes in the mainstream media or other places as well, people think that rent rises, and this is a significant rent, right? Yeah, it was
yeah,
unexpected, as you said. That must mean that we're squeezing the tenant for every last, dollar that they have and being
yeah,
greedy and all that sort of thing. But this is, less than 30% of their total income, so it's very, very affordable. So for me,
yeah,
it's a win-win, and this kind of opportunity isn't everywhere in Australia, but around that Perth area incomes are very high. And so, I think why not? As long as they're happy, I assume they're happy. They've got a rental, which is hard to come by these days, and you've got this fantastic 8.7. And the thing is, like eight. I mean, you know this better than me now. 8.7%. Rents are only going to go up. I'm not saying they're gonna
yeah,
become 700 in 12 months'
yeah,
time or anything like that, but they're gonna go up. Rates may or may not come down this year, but they'll definitely come down at some point. So
yeah.
this is sooner rather than later, it's gonna become 10% yield, 11% yield, and just some assets like this over a 10-year horizon, and it's just, I mean, I'm very happy for you. It's a no-brainer.
Yeah.
This is going to serve you really well.
And thanks, Vic. And I want to add this point again, coming back to the original point that I mentioned, right? So still there are people who discuss about, you're not going to get capital growth in regional towns or in regional cities. So
Mhm.
while this is high yield, I bought it for 330. I settled on this in this 2024, right? So just before 3-4 months. Uh, Today in the morning, there's a property listed in the same area, 2 bedroom. Mine is 3 bedroom. This is a 2 bedroom property. Uh, older than this one, older than mine. So in every aspect, land size, number of bedrooms, in every aspect, it's inferior property, and that has come to market for 460. So it is not that if you have high yields, you're not going to get capital growth. I definitely see capital growth coming on this one as well.
Hmm.
I'm not got it valued. I'll wait for 3-4 months to kind of get it revalued.
Hmm.
But yeah,
There's lots of these myths, Sneh, and I just want to ask you this question as well. We'll wrap it up soon. I don't mean to generalize, but there's a big migrant community in sort of Western Melbourne. There's a big migrant community in Northwest Sydney, other places around Australia as well. And I mean, I'm not necessarily plugged into these communities per se, but there's lots of WhatsApp groups. Everyone has friends, colleagues,
yeah,
family members, extended family members, and everyone likes to talk about property. We all
yeah,
have property as the next person, right?
yeah.
And so there's all these like misnomers that are thrown around. I want to ask you this question because I think you're in this position where you've made some mistakes. You've kind of rectified them. Now if I can say so, you're investing, like a professional. What's your advice to someone who's, let's say, a few years into Australia, they're living in one of these communities, there are all these WhatsApp groups. You said yourself in 2020, there was a lot of information. 2024, there's so much information. Every single person's a buyer's agent. There's probably lots of courses, people like how should people go about it? Because I mean, it's so hard to know what's true. Everyone's saying a different thing. From your vantage point, what's your advice to someone like that?
I think because it's very important to have the ability to identify signal from the noise, right? So there's a lot of noise, uh, and you have to be exposed to the noise to understand, right? So you have to kind of expose yourself to every possible signal, every possible stream of information that's whether it's through WhatsApp groups, whether it's through Facebook groups, whether it's through seminars, webinars, whatever it is, right? So that helps. But then I think you have to apply your intelligence, your logic to kind of filter down what is the actual content that is true, that is validated, that is backed by data, and that's going to help you and that is applicable to you as opposed to noise, right? So I think it is very important to have that capability, and that comes only through, and you have to take action, you have to learn, uh, and you may make some mistakes, but I think, as a lot of people say, property in Australia is forgiving to a certain extent, right? So I think take action, uh, identify people who are providing information backed by data, who you can rely on, but still question them.
Mm,
Uh, and that it's important question. It's important to get the answers to those questions, and it's important to be satisfied by those questions. Only once you ask questions, only once you validate that, only once you're convinced, you take that step. And then, but it's important to take that step as well, because if you don't take, then it's just you'll be stuck in analysis paralysis kind of situation. I have a lot of friends who know about my investment story and then keep on asking me, but why should I spend $700 in doing a building and pest? How can you buy a property without even looking at it? All these sorts of things. So I think you have to do it. You have to take action. But in order to be able to take that action, you have to be satisfied that you have thoroughly analyzed the content that is being presented to you, and you have analyzed it, you have understood it, you have filtered it, you digested it, and then you make a decision based on that.
yeah, such a great answer. And I think that may come easier to someone like you or I who kind of have a analytical mindset. And even if you don't have an analytical mindset, I think people need to come out of their comfort zones because I think there's three types of people. One type of person who sees all this content. I mean, I posted in the Facebook group the other day. I did this experiment. I was just scrolling on Facebook, and I'm not even making this up. Every third ad was an ad from a buyer's agent. I scrolled for 60 posts. Okay, so
Yeah,
that was like
yeah,
20 ads. So you think of like a newbie, it's like, there's a lot.
yeah.
So one person is like, I don't trust any of this. This is all made up, retire early rich, get, all this sort of thing, forget it. And then to just go around with their 9 to 5. The second type of person says, oh, this is really hard. So let me just take a reference from someone, or let me just pick one that I like the look of them, I vibe with their frequency. They seem like they know what they're doing. They have a lot of Google reviews or whatever. without really investigating or doing the due diligence or understanding their methodology. And there was a lady, unfortunately, posted in the Facebook group. She went with one of these ads and bought 2 apartments off the plan in Melbourne, and it's like
Yeah.
terrible idea, $1 million down the drain.
Yeah.
That's the second type of person. All too hard. Let's just pick one. Hopefully, it matures. The
Yeah.
third type of person, this requires work. They want to take action, so they're not like number one. They do need help, so they are like the number two person, but they take the time. And honestly, there's no beating around the bush. It takes time to side by side analyze all your options, whether it's courses, buyers agents, all different varieties of strategies. And then, like you said, I really want to hammer home this point, Sneh, that you mentioned. Ask the question so that the person that business has to validate their methodology. Okay,
Yeah.
does proximity to the CBD really matter in terms of growth? Do we need to be close to a train station? Is there a trade-off between, like you said, yield and capital growth? All these things, these are just three, there's hundreds of them. And then when you are satisfied with someone who gives you answers based on data, then maybe, just maybe,
Yeah.
they're the ones that you need to seek assistance from. But that requires sacrifice. Everyone's busy, everyone's got kids, but you have to
Yeah.
make that effort. And I think property is something, I think too many people treat it whimsically, but it's a $500,000 decision, most
Yep.
times. So I think that was a really good point that you made. And maybe the last question, unless you had other things to add on as well, is now you've got these four investment properties, four or five,
Cool.
four investment properties, principal place. What's your plan going forward? Like over the next 5 years, obviously not everyone has unlimited borrowing capacity.
Yeah.
What's your strategy going forward?
So lucky for me, Pick, I still do have some borrowing capacity for my next purchase. So I'm just waiting for the deposit amount to accumulate. I personally, because I've been burnt on my second, the first IP that I bought in Point Cook, I don't want to over-index on borrowing. So I don't want to lever because I have borrowing capacity. I don't want to kind of go and use the equity from my existing IPs. I'm happy with lowering the LVRs on that right now. But I'm waiting to build some cash up, and then I'll buy my next IP. I do want to get into see again. Right now, I'm in the information gathering phase for commercial property,
Mhm.
and I may have sent you a couple of emails on it. Are you preparing a course for commercial or not? But
I've received 10 requests this week.
yeah.
I don't have a commercial course, but 10 people have asked.
Yeah, so right now I'm kind of trying to analyze because I'm hearing a lot of people saying that you should invest in commercial. It's better than residential. I've I've still not found convincing answers on why is commercial better than residential
Mhm.
uh, at the given current interest rates. So I'm still trying in the process of kind of analyzing that and digesting that. Still asking questions. Not a lot of people are able to provide answers, to be honest, on that. If you
Mhm.
can suggest some resources, that would be really helpful.
Mhm.
But that's something which I'm exploring. Till then, I'll continue buying residential properties.
Right.
That's
Well, I
the
think
plan.
you've inspired me actually. What I might do is on one of the Tuesday client mentoring calls, I might dedicate that hour to just going through the pros and cons of commercial, even though I don't cover commercial necessarily in my course. But I think there's probably hundreds of people like you
Yeah,
in the course that are just got it in their mind. So would that be a good idea?
yeah, definitely.
Yeah. All right. Let's do that in the coming weeks. But let's wrap it up there. Sneh, well, I really appreciate your time. I'm really grateful that you put your trust in me. I'm sure, I mean, I don't know the thought process, but I'm sure it didn't come overnight. I'm sure you did a
Yeah,
lot of analysis and due diligence on me. Can I ask a cheeky question? And that might
yeah.
shoot myself in the foot here, but I'll edit it out if it's not the right answer. No, I'm just joking. Had you known about me before going with that buyer's agent, would you still have gone with the buyer's agent or would you have done the course?
It would have depended on what videos I would have seen from you. Because see, what convinced me to go with that buyer's agent was their promotional videos in terms of their approach and methodology, and that was convincing for me to say, okay, if they are doing this, then logically that seems like that'll, you know, uh, reach the right location kind of thing. So if I had come across some videos where you would have highlighted your approach or what you're getting in the training content, uh, then yeah, if I was convinced to uh, that I would be getting the right content what I'm looking for, then yes, I would have done your course before.
Nice, nice. Maybe I need to do some promotional content. I don't really do that stuff, but good to know. Well, great to catch up with you, Sneh, and thank you for being so generous. And I think the way that you've articulated your thoughts have been very raw and honest. And I think that that kind of really does land with people, and probably thousands are going to watch and listen to this. So you've just immensely helped them. So on behalf of them too, thank you so much.
My pleasure, PK. Thank you for this opportunity. Yeah.
Okay, thank you everyone for listening. As you know, I always say this, but there's more than 130 of these types of interviews with Property Investment Accelerator clients in the client results playlist on YouTube. I always say this as well. I honestly don't mind if you do the course or don't do the course, but at least take the time to go through these videos, because just like with Sneh, you'll just get the type of content that you don't get anywhere else, like truth and just honesty and real world experience. And that will hopefully inspire you and educate you to take action, whatever that action is for you.